Welcome back to another video. In today's video, I'm going to be breaking down how I find my higher time frames areas of interest, and then at the very end I'll go into a little bit detail on how I find my lower time supply and demands, which then gives us a potential entry signal. So with that being said, let's jump into it, starting straight off with our weekly time frame. So as you can see here, we are on GU USD, which is the British pound versus the US dollar, and we are going to be breaking down exactly how we find our weekly area of interest, which starts out very simple. First off, we have to find our higher high and our higher low. So how do we find our higher high and higher low? Well, my mentor back in the day when I was going in school, we used the snake trick, which is a little snake head here, and then you go down like this into the first bend, and that's where you find your lower high or your higher high. So once again, using the snake trick, you go to the top of the structure, you make a little head, and you swivel down all the way to the very first bend. That is how you find your higher high and your higher low. So let's get this out of the way here. So now that we know that this is our higher high and this is our higher low, we know that this trend is now bullish. So like I said, higher high. Let me mark this off for you like this. This is your higher high. Type here, text. This is your higher high. Let's Control C. And this is going to be your higher low. We can change the text here to higher low. All right, let me stretch that out a little bit. Just like that. So higher high, higher low, on that is on your weekly time frame. Now going down to our daily time frame, it's the same thing. So finding your higher high and your higher low, remember, grab your snake head, find the highest point, a little snake head like this, and then you go down to the very first bend. Now, and this is in my opinion, in this type of scenario here, you have a bend here. This could be your higher low, or if you don't want to count that as a little bend, this could be your higher low here. Now, and that's all preference. That is all preference. For me, I am going to take my snake and I'm going to say this is a higher high. So when I like this is my daily higher high here, like that. And this is my daily higher low. You can use this, but I'm going to use this higher low here. Okay, so now we know that this time frame is bullish as well. And you can be asking, well, this candle, if you wanted to use this low here, you can be like, well, this candle broke that. Well, technically this candle has not closed yet, so this candle does not count. So now let's go down to our 4 hour and find if this is higher high or higher low, or if it's bullish or bearish. So on this one, you can see we're going to use this point as our higher low. How do we do that? Again, find the highest point, grab your snake, boom, snake, go down, and there's your first bend. Okay, so that is now officially your higher low right here and right here. So then you can see that price broke this higher low right here. Here's your higher low. So now this is a bearish trend, making this your higher low and this your lower low. So like I said, this is your lower high and this is your higher high. Price then broke here with this engulfing candle, making this a lower low and a lower high. And then in order to keep this bearish, this price has to break this high, which it did not here, making this another lower high and this the lower low, because it did break again. So now as you can see that our 4 hour is now bearish. So with that being said, now you know that your 4 hours bearish and your daily is bullish and your weekly is bullish. So now going into it deeper, let's find our areas of interest. And the easiest way to find an area of interest is finding 3 consecutive touches. What do you mean by 3 consecutive touches? Let's break it down here and I'll show you. So going back to our weekly time frame, we know that our higher high, let's get rid of this one, our higher high is here and our higher low is there. So in order, the way I do this is I grab my box, I go from the higher high and I go from the higher low, and then I stretch it out. Now on this, the secret to this is you don't want to go too far back. Normally I go a couple years back on the weekly, So we're in 2021 here, December, on this way left, and as you can see, there is really no consecutive touches in here. This has no, I mean, you could maybe fine tune it to here and to here, and now you can say 1, 2, 3 touches in that area. And normally I only like going off of candlesticks. I don't like going off of wicks, so we're just going to give that one an exception just because it is very, very tight. And then measuring it, you have to make sure it is staying in between 50 pips. As you can see, this is 86 pips, which means that it's too big. I don't like when areas of interest are that big. So at this point, we are going to check right here. Is this a valid area of interest there? Let's see here. Make sure that one's touching. This looks like it's going to be too big as well. This is 80 pips again, so this is not a valid area of interest. But as you can see, we did find the 3 consecutive touches. We used this one, and this one, but it was not within our 50 pip range, so we're not going to count that as a valid area of interest. Now, like I said, also another thing I want to break down. We'll break it down when we look at this one. You can see this is our higher high and this is our higher low. So we're going to grab our box again like this and go like this and stretch it out. And this one does not look like it's going to be a good area of interest either, so we're just going to skip that and go straight to our 4 hour. And this looks like a very, very good solid opportunity for an area of interest. Remember, this is our higher high or higher low, and this is our lower low here between the candle sticks, not the candle wicks, the candle sticks. We grab our boxes between these 2 zones like this, and then we don't want to go below price. Price is already broke. As you can see on the higher time frames, we're looking for buys, right? On the higher time frames, buys. On the 4 hour, we're looking for sells. So obviously we want to look for where the 4 hour could possibly reject to go to the upside. But let's mark off both sides of the zone, see if we can find where it could potentially head to the downside or potentially reject and then push us to the upside. So going back on the charts, we are seeing that there's a potential zone here. Let's see, we're looking here, here, and here. Let me grab my arrow, show you again. 1, 2, 3 taps, and then we're going to suck in the top, and we're going to sneak in this zone here and this zone here. So now we have 1, 2, 3 taps, 4 taps, 1, 2, 3, 4 taps, and you can maybe count this as a 5 tapper and make this your 4 hour area of interest. And I like to make mine yellow. So now we have a valid 4 hour area of interest, and on our 4 hour you can also see a left head, right shoulder confirmation. And now we can get into this in a later video, but if you know anything about head and shoulders, that means that it's a bullish trend flipping to head to the downside, making it's going to be bearish. And on these situations, you wait for this beautiful retest at this 4 hour area of interest, at this 4 hour EMA, and then you look for the sells to then fill all this imbalance. But that is another time for a different video that's more detailed, and we'll get into that later on. So with that being said, that's a very simple way to find your areas of interest on the weekly, daily, and 4 hour. You look for your higher highs and your higher lows, or vice versa, your lower highs and your lower lows. Using the snake trick, you do the circle at the top, you find the first bend, and that's where you find your area, your higher high and your higher low, or vice versa. And then once you get 2 consecutive time frames in sync, you look for the buys or the sells. And then once you find those 2 consecutive time frames in sync, you then find areas of interest using 3 consecutive touches. And you also want your area of interest to only be 50 pips big, and you don't want to go over 50 pips, otherwise then your stop loss does get extended. Once again, I'll explain that in a later video. Now that we went over our weekly, daily, and our 4 hour areas of interest and our consecutive time frame and the consecutive time frames and the 3 touches, define those, let's go down to our 1 hour time frame and look for our supply or demand zone to then narrow down our entry signal to then get the tightest stop loss possible and all of that fun jazz. So here we go, jumping right into it. Let's go down to our 1 hour here. Now we're looking at GBP USD again still, and we use an inducement. What is an inducement? Well, an inducement candle is when price is bouncing up and down like this, right? And then creates a higher high with a wick, and then creates a break of structure, which is a wick to a candlestick, which then creates our supply zone here and our entry signal potential on that pullback. So we can show it here. Here it would be a supply zone creation like this, supply zone, and then right here would be your BOS, which then would be a break of structure like this. And on this is where you would be looking for your entry signal on the retest here like this, to then take your 1 to 3 at the bottom of structure like this. So now that we know kind of what it is, let's find one on price here and show you an example of what a supply zone is. Like I said, this little breakdown was a little bit more advanced. It is for lower time frames, and we'll get that into a later video. All right, so looking at structure here, we see right here, here is an inducement potential, but as you can see, price did not break. This is the low on here. Let me grab my stick. There is the low. There's the wick that created the lowest wick at the higher low or lower high. You can see here's your higher low. This is your lower low. Or on this scenario, this is your higher low and this is your lower low. Yes, but looking at this on the lower time frames, we're looking just inside of this zone, knowing that this is the higher low and this is the lower low. On this, you can see though, this would be the higher low and this would be the lower low if it was a productive movement. So as you can see, there is no supply zone here that is validated. So let's scroll back to see if we can find another one. Boom, right here. This is a prime example of a inducement candle with the BOS, with a push. Here's the retest, and then there's the sell, just like we were talking about before. So you can see this is our supply zone here. The candle before the move. The inducement candle is here. Let's grab our inducement, which is the candle wick that outwicks the previous candle. Then that increases that in this candle promotes this to then proceed to dump, which creates your BOS, which would be right here. As your BOS is created because this candle then, the inducing candle made the push to the downside. So price pushed up, came back down just a little bit, and then proceeded to push up, making a candle wick outwick this previous candle, which then proceeded to then have the mega dump, which then created the supply zone. As you can see here, like I said, just like what we talked about, this created the supply zone there, which is right here. The push, the next second candle that pulled back and then pushed again, which and then induced this candle, because this candle wick is lower than this wick, which then proceeded to do the dump, which then created the BOS at this wick here. At this wick here, created the BOS like this. And as you can see, price then dumped, pulled back into our supply, which is where we look for an entry on our sell or buy limit. We look for that entry on the pullback of the supply zone to then take our trade to the 1 to 3. As you can see, this one dumped beautiful. Our trade, we would have been looking for a 1 to 3, which would have been at the bottom of this low here, where we would have taken partials and then potentially have left runners. This is a beautiful entry on the 1 hour. So now, with that being said, now you know what it looks like on the 1 hour. Let's see if we can make it smaller and take this stop loss and make it even smaller. So now we know that the supply zone is here. We can see if we can find an even better one. Now, this is also an inducement as well. Why do you say that? Well, it's the same thing as here, it's just reversed. This candle outwicked this candle, creating this to be an inducement here. Now you're using the bigger wick because it's reversed. It's reversed. So on the first one, you can see the candle pushed up and you use the candle behind it. The same thing, you have to use the candle behind it, but now you're looking for a possible entry off of this supply zone here. But using this supply zone, you can quickly see that this supply zone was very quickly mitigated at this point. So if you would have got it on this entry without knowing the entry signal, you would have been wicked out. That's why the higher time frame supply zone is still the stronger supply zone. So we're still not interested in that 30-minute supply zone. Let's see if we can go back to the 15 and find an even better supply zone. Boom, right here you can see this is a cleaner setup, cleaner supply zone. But you could say, oh, Anthony, this has been mitigated. It did wick into it. Well, I won't count that. I like to see if price came all the way down here, right? Instead of dumping again here, it came back and touched. Then I would say, yes, the supply zone has been mitigated. But from here, the supply zone was not mitigated. But if you would have done that, you would have missed this trade. So then we keep looking. Is this proper? Okay. No, no, no. 5 minute. No, no, no. Boom. Supply zone is here. There's another inducement here. Like that. And now we are interested in this trade. Here is your BOS here. Instead of your BS being way up top, you can use your BOS here. But now we want to use it below the supply zone. Your BOS is now below, like this. And you got to remember, price is moving right now. We're pretending that all this is not here, and we're looking for supply zones. So as price is dumping down, you want to get closer and closer to price as you can, but staying above it. So if we were in replay mode, you would see that none of this was here. And so we're just trying to act like none of that's there and trying to find the closest supply zone as we go down and find the best BOS. As you can see, this price then came back, retested this BOS here, and then created the sell. But ultimately, it's hard to do it with that when you don't understand how to look for the 1 hour supply zone. Right off the bat, the 1 hour was the best entry. Let's see if we can find it again. There we go. Like this. Using the 1 hour, you would have been in the safest entry. And obviously the higher time frames are the safer time frames because your stop losses are bigger. So on this trade, we would have used the 1 hour supply, got it in at this supply zone entry just because the lower time frames were not pretty and not very coordinated. We would have got in on the supply retest of the 1 hour there and then taking us to a simple 1 to 3. Now, if you want to see this in live time trading and join my students who are taking huge wins, we had a $5,000 win today, we had a $2,000 win, and we had a $200 win today from 3 different students. And myself, I took a nice, decent win. We are receiving 1 to 4s, 1 to 5s, even 1 to 10s. Within the last few weeks, we have been crushing the market. And if you want to get in some live trading action with us and the team, where I go live every single day, Sunday through Friday, we go live from London session, and we also go live for New York, where we give you 2 opportunities to catch trades and trade live with me. If you want some of these trading actions, click the link in my bio, jump in our Discord, and I'll see you in the live trades. Thank you for showing up. Hit that subscribe button, and I'll see you in the next one. Peace. Thank you.